Per usual, living on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at some ETH and BTC charts, starting with BTC here, and it hasn't been super impressive, kind of low liquidity chop, probably as expected. I think with BTC more so than ETH in the near term, there's a potential for an Adam and Eve here, VU. Here's the yearly pivot, it's yearly rollover. There's tons of OI sloshing around on Deribit, on CME, especially with BITO, ETF. So there's lots of like churn that's coming up in the next couple days here, end of the week. Is that what we're seeing today? Maybe, I don't know. I mean, we'll find out by Friday. But in general, any high volume churn event should have an expectation of increased volatility. That doesn't mean bullish volatility or bearish volatility. It generally just means something's going to happen, right? There's a ton of people, contracts, whatever, being forced to close a position one way or the other. That's one thing to keep in mind. The other thing is BTC and ETH, for the most part, are either neutral or bearish. So what does it mean to be bearish? It means the expectation is lower lows. The expectation is not higher highs. We're below the cloud here on BTC. We're below the 200 again. Both of the most important litmus tests I use tell me, yeah, don't expect higher highs. Don't expect massive strength. Don't expect crazy bullishness until really we're back above 54.5, somewhere up there. We're going to get new yearly pivots in a few days here. Something I'll be excited to watch for. You'll be popping champagne. I'll be looking for the new yearly pivots. We are not the same. You could pre-calculate these ahead of time. My guesses are going to be somewhat similar to what they currently are because the range has been relatively tight. And when we have a tight range, yearly pivots are tight for the next year. But that's something else to consider. The entirety of this year, yes, it has been a large range, but it has been range bound. It has not been set it and forget it, Ron Popeil style trend type stuff. There have been surges of lower time frame trends within the range, but there have been tons of times where anybody could have easily been mega chopped up. And trend metrics in general haven't really helped you too much. The cloud has done a pretty good job of that. Here it told you lower lows. Here it told you bounce. Here and roughly around here it told you probably higher highs. And now it's telling you lower lows. So I'm not going to say the cloud is useless here because it should still keep telling you what you need to know. It's telling me, yeah, until we're above 54.5, just don't get too excited when you see prices pop up to 52. Now, we're not truly in a bear market until we're bearish on the weekly cloud, or at least neutral inside of the weekly cloud. 2014, 2015, this was post-GOX explosion. That was bearish, obviously. The GOX recovery, Bitfinex hack stuff, ascending triangle here, and then bull market. So the bottom line is here, if we go neutral, we're probably going to be neutral for a while. Look at COVID, look at 2019. This is post-plus token, post-COVID recovery candle. We've got a long ways to even get to that point because the cloud itself isn't even red yet. It's not bearish yet. We're not inside of it yet. This could easily recover. But where it's standing from my eyes, it's going to be tough to turn this ocean liner around. Because anytime I pull up the chart, I don't want to think to myself, is that a head and shoulders? I don't want to think about that. I don't want to think about, is that a descending triangle? I don't want to think any bearish thoughts whatsoever. You know, when you pull up this chart here in 2019, 2020, leading into 2021, all anyone's thinking about is inverted head and shoulders. All anyone was thinking about is white coffee and accumulation in 2015, 2016, right? That's all they're thinking about. All the people were thinking about in 2018, 2019 was Adam and Eve, ascending triangle. It needs to be no doubt about it in order for you to have some sort of comfortability with it, at least for me. So when I see this, I'm thinking, okay, is this a double top? Is this, there's no bullish thoughts here. I don't have any bullish thoughts whatsoever. You look at it on the 5200, again, there's that Adam and Eve potential head and shoulders potential fractal. You've got a death cross pending here on the 50 and the 200. Another way of saying, yeah, don't expect higher highs. Is it going to be a perfect low? Is it going to be a perfect entry? No, that's not what it's telling you. It's telling you, hey, permabull, hey, trader, be careful. The conditions are such that we are no longer in blanket expectations of higher highs. The most powerful crosses are going to be after multi-week, multi-month shifts. This just crossed recently. Even still, it's telling you, yeah, be careful. And it may be chop, right? This is what neutrality looks like. Crisscross, crisscross, crisscross. But the point is, it's not safe to get back in the water until we have a bullish cross again. It's not bearish yet, but if I'm front running that, I'm thinking, yeah, just like this head and shoulders, I'm not going to get comfortable in any long position in size when the chart looks like it does. Let's say you don't like the 50 and the 200. Look at the 1050. Look at the hit rate on this bad boy. This one gets you in and out in crazy trades. This is all plus token ascending triangle. This was the head and shoulders. It even gets you in, honestly, in two pretty good trades post-July. Currently, it is bearish. So make a list of check boxes that you need to fill. Are we above the cloud? No. Are we above the 200? No. Do we have a bullish 5200 cross? Yes, but it's probably going to cross bearish. Do we have a bullish 1050 cross? No. Are we bullish on alligator fractal? This chart's busy, I know, but the alligator fractal stuff is in the background here. Are we bullish on this? No, we're bearish. These MAs are cross bearish, and the fractals aren't telling you to start longing again. So yeah, can we have a falling wedge that has some sort of mean reversion potential? Of course. We did that here and we kept going, right? But we have such little evidence from my seat that we are anything but okay right now. And yeah, it's easy to come and say that the day that this thing drops from 52 to 47, I get it. But even still, the trend is not on your side here. If we zoom way out, 29K and 150K, sorry, is the range. This is the 2-year MA multiplier. Green is the buy zone, red is the sell zone. Is this perfect? No. Is it pretty good? Would I trust it in the future? Most definitely. You can see it caught the COVID low, it caught the 2018 low, caught the 2015 low. It caught all of the highs, arguably including this year in 2021. So if we're bearish in Q1 and or all of 2022, what am I looking for? 29K. If we make lower lows or start to make lower lows past the May-June stuff, 29K for sure is where we're headed. And then at that point, for me, it gets to less of, do I start margin longing because we're bullish, and more of, do I start buying spot longs because we're in territory historically that has been a good place to buy. It's that simple. It's a different kind of long. It's we might be here for a couple months, but this is a pretty good place to buy long versus, we're going higher tomorrow type of long. You can look at the logarithmic growth curves as well. These are curve fitted on purpose, okay? They are curve fitted in order to give you some idea of what may happen in the future. So yes, they do look very good because it's line of best fit. They should look good. And for the most part, this thing has picked out the highs and lows based on line of best fit. Currently, again, that's 26,150. So not much different than the 2-year MA multiplier. And that kind of matches with a lot of other stuff. 18 to 26 down here in the 200-week EMA and 200-week MA. We've got the pitchfork down here at 28K. So yeah, I don't think we're quite failed experiment levels if we're back down 20 to 30. I think we'll be just fine. We should find support down there. But if we do go bearish from the range we're currently in, this 30 to 60 stuff, it's not like it's rocket science. Like, yeah, that's where support is currently. And we already tapped that mid-year, honestly. So now if we get into the further prognostication part, here's again the pitchfork, and trust me, there are wicks here that this fits on candlesticks, but let's say we do make some sort of head and shoulders fractal on a diag, and based on seasonality, maybe we crash down in Q1. Where would I expect to bottom out pre-Q2 or in Q2 would be somewhere in this 30 to 42 range. Let's say we get a wick to like 26, right? This is massive crystal ball stuff. A wick to 26, 22, recover from 28 to 42 in Q2, and then make a decision from there. That's certainly a possibility. But what this does not look like is, we're just going to shoot up to 150 tomorrow. That, I'm certain, is a very, 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 very remote possibility. Now, you could say the most likely outcome is probably just chop within this range in the middle of this rate of change, but that would also fulfill the likelihood of this head and shoulders either during Q1 or end of Q1 into Q2, something like that, based on seasonality. Something else, as far as the check boxes are concerned, is seasonality on your side to be bullish in Q1? The answer is no. Historically, crypto is flat or negative in Q1 for a variety of reasons, including taxes, which are going to be huge for a lot of people this year. A lot of traders don't want to admit that that's an issue for a lot of people, but it will be. especially the more money you made in 2021. Here's again another look at that head and shoulders. And I don't care what you say, this isn't not there. It is there 100%. And I don't want to be on the bullish side of the trade when I see this setting up. If it's about to thunderstorm, I'm not going to have a picnic underneath the tree, okay? I'm going to avoid being outside for a little bit. Even if you invert this, again, there's no doubt that this looks like head and shoulders, or that it's setting up for something of the sort. And this could break early. It did break early in September, October when it was looking like that's where we were headed. This did end up breaking up, fulfilling its destined target before making a shoulder. So even having this diminutive shoulder that we kind of do now, would I call that a shoulder? No. But again, I don't want to have to think about this if I want to be bullish. If I'm bullish, this is not on the table at all. So we need to get out of this pattern obsession on the chart with this price action, right? We went from calling rising wedges bullish. Everybody tells me all the time, rising wedges are bullish, Josh. Yeah, I'll believe it when I see it, right? This falling wedge, descending triangle thing, again, this is not a place where I want to have to think about, is this bullish or bearish if I'm actually bullish? So we really need to get away from this stuff and actually be trending, because when you're trending, this isn't something that is in consideration whatsoever. Something else to consider, let's say we go mega bear, like ultra turbo bear for some reason, legacy goes to zero, whatever happens, right? Even during COVID, we only briefly got below the BTC mining cost level. It's currently at 12K, assuming this is correct. I didn't double check this data. It's a complex calculation, but that is all the way down at 12K. That's a long way down. It's something you can watch to sort of lead this is, what do miner outflows look like? We can look at every coin that's ever created on chain, assuming crypto quants data is correct, and see when miners are selling. You can see over the past couple days, they have been selling a little bit more than the previous 2 weeks, perhaps. And what's kind of terrifying for me is all the BTC these miners are sitting on in this range. Historically, miners aren't the best traders. Ideally, you see them letting go of coins as we're going up. That's the way it should be done. That's the way anybody with a ton of size should be letting go of a position, is selling into strength like this. But that's certainly not always the case. Wasn't the case in 2018. So what we don't want to see is a bunch of miners at 30K deciding, okay, now's a good time to sell, right? We don't want to see them capitulate. Or you do if you're bearish, or you do if you want prices significantly less than 30K. Because what happens when we're already bearish at the lows and we get a bunch of supply basically getting unlocked, you get pile on shorts, you get more panic, more liquidations, and you just get a waterfall cascade, kind of like we got in 2018. So the more they let go in this range, the better I'll feel, because then they will have likely less of an impact at the lows because they'll have less ammunition to start selling. Something else you can watch is miners to exchange flows. Again, it kind of tells you similar data, but it tells you they haven't really sold much over the past few weeks. Exchange reserves is another metric to watch that has picked up slightly, kind of for the first time since July. And if you are bullish, you want to see supply getting removed from exchanges. If you are bearish, you want to see coins being sent to exchanges. You generally don't send coins to exchanges unless they're being sold, as was the case kind of end of April into mid-May. So if we see spikes in exchange reserves, typically it happens one-to-one with declines in price. Something else to watch into 2022 are the ETF flows, ProShares specifically, because that's the biggest one now at over $1 billion in AUM. And they had a ton of inflows a few months ago. That certainly has been muted since then. Had some purpose investments, inflows as well, but generally it's been lackluster following the initial surge. It's definitely also worth just tracking AUM as a whole. But the big one for me, I'm sure everybody's seen, this chart. But the question for me is who is selling? If the ProShares people start selling already, that's a really bad sign into 2022. I don't think that'll happen, right? But that's something to watch for if we go turbo negative because of some weird futures, contango, backwardation, any of that stuff. You just don't want to see that if you're bullish. You just don't. That's not how this works. We can't have massive outflows everywhere in influx of exchange reserves. I don't care if it's futures or spot or whatever. It doesn't matter. It's all part of sentiment for sure. ETH miner revenue got talked a lot about this year, but Bitcoin miner revenue is actually quite high historically still. And something else that got even less coverage was the fact that most of this is the block reward. Very little of it is transaction fees. And this won't be an issue in my lifetime, most likely, but by 2140 rather, we're going to have to find a solution when there is no more block reward to pay for the security of the network. This has been talked about before. It's talked about every couple of months. But it's definitely interesting to think about how would we secure the network if it wasn't for the block reward, because as a percentage, transaction fees are less than 1% currently. And you can see we've had periods of this where it's very hard to, it would be very hard to secure the network if that subsidy did not exist. Something else that's related to mining and transaction fees, or transaction fees, transaction counts, all that stuff is hodl waves. Again, we can look at when the last time coins have moved was, and we can see how that correlates with price. What I was hoping we'd see on some mega euphoric high was 50% of the network moving in the past 6 months. We didn't even get close to 50%. We barely exceeded 40% and then pulled back from there. So it was a very muted, non-exciting all-time high. And a lot of the churn that's been happening on chain over the past couple months has just been newer coins moving. Glassnode's looks at this a lot, and they've got some good charts on that. But the bottom line here is not a lot of older coins are moving. You're not seeing just massive spikes. Not a lot of hodlers are selling is what this is telling you. Transaction counts, active addresses, green and red respectively, are also unexciting over the past year, really since 2019. Transaction counts on BTC haven't done too much. Active addresses in a pretty wide range, but since July they are up. Since 2017, they haven't really done too much, right? We're not seeing some crazy onboarding continuously with the network. If I'm looking for reasons to be bullish, I'm looking for month over month, week over week rises in on-chain metrics, which arguably aren't there currently for BTC. And you can say, okay, maybe some of that's on the Lightning Network, maybe, but I don't think the Lightning Network in its current state or usability is enough to move the needle. The holy grail of bear market lows is going to be the MVRV. This is a measure of market cap versus realized cap. And if you correlate this with bear market lows in 2011, 2015, 2018, the Corona low of March 2020, every single time we've gotten below 1 on MVRV, and usually much lower. Corona was 0.7, and then the rest of the bear market lows were between 0.5 and 0.7. Currently 1.5. So we got a ways to go. Something else on the year that was interesting, not a big spike in Google Trends worldwide past 12 months, other than the range low in May. That is not a good sign. Most of the Google searches were at the low, likely new entrants panicking or something. But ever since then, Google Trends flat down for BTC. And if you think that looks bad, ETH, arguably worse, really didn't see any pickup in Google Trends until just before those lows or at those lows. And for the rest of the year has just been flat. And if we compare Bitcoin and ETH to SHIB, NFTs, and Doge, you can kind of see how it's interesting that it lines up like this. Right before those death candles, Doge was super popular. SHIB was super popular. Doge exceeded Bitcoin Google Trends briefly. And, a lot of retail just was confused about what to do by the looks of it, because they kept jumping into the next hottest thing, whether it be GME and AMC, into Q1, DeFi, then Doge, then Pancake Swap, and then all this other stuff. I'm not saying we need retail in BTC, but it doesn't help BTC and ETH that retail is focused, or looks to be focused, on things like Doge and SHIB and Sol. We're diluting attention and we're diluting price of market cap of all this stuff, because it is a bit of a zero-sum game. So moving on to ETH, the TA for ETH I think is pretty simple. The 1-year MA multiplier, 2,800, 14K. Those are the two levels. Huge range. We're closer to 2,800 here. Historically, the hit rate on this has been accurate, but also has a high duration as far as the bear market lows. So yeah, below 2,800 is a better place to buy than now, but you could also be underwater for a year, right? From May to May, this thing was below the MA, and it did hit the multiplier this year. Arguably, this is the 5x multiple of the 1-year MA. But again, currently it's just kind of in no man's land. It doesn't look great for bullishness, certainly. And on the cloud and the 200, we're about as neutral as you could get. We're above the 200 inside of the cloud until we're back above the cloud with a bullish TK cross, as is the same with BTC. The expectation is neutrality or bearishness. The expectation is not some magic higher high to 6K. You will see this turn green before we hit 6K. I can guarantee you. So you might as well just wait, not investment advice, but if you're looking for something, just wait for this thing to get back above 4,200 with a bullish TK cross. That's it. If those conditions are not met, then I will not be going mega margin long. There's just no reason to do that. The times to go margin long are either bullish TK or bullish Kumo breakout or bullish TK cross like we got here. Even this wasn't great. It was super late, right? This ended up being okay. But much like BTC, a lot of ETH has been a garbly mess. Despite EIP 1559, despite the ultrasound money narrative, despite NFTs changing the world, new paradigm type stuff, you can't really see that on the chart because probably massive dilution of market cap, attention, excitement, too many projects, not enough money to throw at them. Here's a 1050 on ETH. Again, it's bearish. You need this to be bullish. The good news is it's bearish. So when it turns bullish, you'll know. The bad news is if you're long, the MAs are just not on your side. Look how clean this was from October to May. 1050, never wrong. Bounced on the 50 till the very end. 1050, July to September. Perfect. 1050 from October to November. Perfect. Right now, not perfect, not bullish. Okay. Alligator fractal also bearish here. We do not have a bullish cross on these MAs. Here's how it looks. If you're bullish, right? This is about as clean as it's ever going to get in October, November. Definitely doesn't look like that now. Here's the 50 and the 200. So some solace can be taken in the fact that we're not yet below the 200. And we're likely more than not to probably bounce at that level. Somewhere around 35, I think it is now. And if we want mega zoomed out prognostication with an ETH pitchfork, I could see us delving down to lows in Q1 and then doing something crazy in Q2. Maybe we hit 10K in Q2, 2,500 in Q1. Certainly wouldn't be out of the question. It just feels like everyone's exhausted up here. Nobody wants to buy highs. Nobody wants to add to positions with size. Nobody wants to pay for longs. Whatever it is, there's just not enough excitement to get us moving at these highs for ETH at 5K plus. And the transaction counts and active addresses for ETH as well, week over week, month over month, since May have just been kind of flat, not exciting. You're not going to really move the needle with price when on-chain activity is just kind of flat. And then ETH's MVRV, you're looking for a level below 0.6 in a bear market, 0.7. Currently we're at 1.6. So we got a long ways to go for ETH. At the very least, I think the Corona low would be met around 0.6 in a bear market. We'll probably never see 0.3 again. This was a special case when ETH ICOs were unwinding their treasury. So tons of supply was getting unlocked. So I'd certainly expect somewhere 0.6, 0.7. And then the question for 2022 is, what does net emission look like? Currently, it's around 2.5% per year, if my math is correct. It's not negative. It's not insanely better than BTC as far as inflation is concerned. It's about on par with BTC, slightly greater. But this was the whole mega narrative leading up to the deployment. It was all about the fundamentals, and arguably it did move somewhere, but it probably wasn't as bullish as many people expected it to be. Then lastly, just looking at ETH BTC, ETH BTC has never had a bullish Q4. It's up 10% currently against BTC in Q4 since October. So this is the first quarter that it's ever beaten BTC. So it's certainly done quite well in that regard and does look better than BTC on the spot pair. Even ETH BTC still looks rather bullish, still has this ascending triangle, Adam and Eve, whatever you want to call this. It doesn't look M double top, doesn't look descending triangle. This doesn't have any shades of bearishness whatsoever just yet. So the expectation of 0.1 still definitely on the table. That's all I have for this one. Hope you had a good 2021. Hope you have a better 2022. Like, dislike, comment, share, subscribe, and happy trading.